Hi, good evening, everyone. Welcome back to another episode of Investing and Business. All right. Can you guys hear me? If you can hear me, right, please type invest. Because in this sharing, we are going to share with you exactly how can you start investing $50,000 for your parents. All right. If you can hear me, please type invest. Let me just see the comments and see whether are you guys streaming in. I know there's gonna be some lag. Okay, let me just double check. Yeah, I think I can hear my voice. I believe you guys are able to hear my voice as well. Okay, let me share the screen so that we can get started. Hold on, it's here. Okay, let me see this one. Share screen, and yeah. Here we go, guys. All right, let me see whether your comments are coming in so that I can make sure that everybody is able to hear me, see me clearly as well. All right, if you can see my screen, please type SEE. All right, if you can see my screen, please type SEE in the chat, and so that we can get started. All right, so why are we doing this, right? It's because actually some of my people who follow my channel, right, they actually posted this question, like this lady, she actually wants to invest for her parents, and she has some questions regarding exactly how can she get started. So I think it's also a very relevant question for a lot of people. I believe, like you guys also want your parents to compound their wealth even though they are at the retirement age, right? Because the cost is rising, medical bills, everything. So how can we actually invest safely for our parents as well? All right, thank you so much. Thank you, ZQ. Thank you, Han Ho. Thank you, Andy, for letting me know. And yes, so if all of us can see, then we can get started, right? So I also want to know about, like, you guys. Are you guys investing for your parents already? If you are investing for your parents, right, please type parents in the chat, okay? Because I'm personally also investing for my parents as well. And recently, my grandma also passed me some money for me to help her invest. So I think as I go through this journey with you, maybe you can see how can we actually you can also implement whatever things that we are going to share, and maybe you can also start investing for your parents as well. Okay, I can see ZQ is already investing for his parents. Fantastic. All right, so I believe this session will be helpful for you. Maybe you can also share with me exactly how do you invest for your parents, and we can learn from each other. All right, so I think the very first thing that you need to ask yourself, if you want to invest for your parents and even for yourself as well, if you have $50,000, how can you start investing for yourself? All right, you need to ask yourself, right, what are their goals? All right, because parents are not you, right? So you need to ask them what exactly do they want to achieve from their own investment. Everybody is different. You and I are different as well. You and your parents will also be different. So does your parents want to have like income, or do your parents actually want growth? Okay, because people can be different. You never know. Even people at the retirement age, they can still want to grow their portfolio, because we have seen from our students, some of the people that we personally coach, even though they're at retirement age, they also want to continue to grow their portfolio. So you need to ask them exactly what are their goals, right? So if they are someone who are willing to grow, then then you need to ask them what is their investment horizon. Because recently when my grandma actually passed me the money, right, so I also have to tell her upfront that if I were to invest for you, it cannot be like a short 1 year or 2 year kind of investment, because for a really substantial kind of return, you should be looking at slightly longer term. So I think it's very important to also set this expectation with your parents or whoever that you want to invest for, right? So I can see ZQ, most of the time he actually buys REITs, okay, for the parents, and buy corporate bonds, physical gold. Wow, very nice of you, buy physical gold as well. Capital preservation. So for JS, maybe for your parents, you want to have capital preservation. So that means exactly how can you preserve the capital well, but at the same time still have some passive income coming in for your parents' retirement fund. All right. So once you know their investing horizon and there are goals as well as their risk profile, right? Risk profile in terms of what kind of companies are they willing to are they willing to bear the high risk, or are they generally more for capital preservation like what JSA? If that's the case, then probably need to go for very, very safe company or safe investment vehicle, which I'm going to share with you exactly what, in my opinion, it's a safer way to invest as well. So the next question is, hey, if you guys are not reinvesting for your parents, then maybe you will also encounter this question. So who should invest for them? Right? Because at the end of the day, this sum of money, rather than putting the money in a bank, which is going to erode no matter what, right? Because inflation is catching up, bills are catching up. So how can we actually invest safely for them? So the question that you need to ask yourself is, do you want to engage professional people to invest for them, or do you want to invest by yourself? Because this is exactly the question that my follower asked. Okay, she's asking, hey, may I check with you as buying pure investment plan like Excel, AXA, or Manulife better than investing our own in TD? So TD basically it's an account that she is using to invest for her portfolio, and I believe her parents also see that she is doing a good job as an investor. That's why they also want to consider start investing for their own retirement fund. So when this follower of mine asked me this question, then actually the first question that you should ask yourself is, can you do better, right? So for example, is your investment ability better than those professional people out there? If you are able to generate higher return, then you can even consider investing for yourself and investing for your parents as well. So let's take a look at, since it's a very, very particular kind of question, including AXA, Manulife. So in these sharing, I'm just going to go through one of the investment product out there that you can buy. But once again, this is not a buy or sell recommendation, and it's really for you to have a proper education before you even decide to invest in anything, right? So actually, the one that I personally look at because of her question is AXA, right? And I know that AXA, there is quite a famous investment plan. It's called AXA Pulsar plan. And the first thing that you need to ask yourself is, if you decide to invest in AXA Pulsar or whatever investment linked plans that's similar, right? Then firstly, what kind of fees are there that you definitely need to pay, right? Because you are getting professional people to pay for to manage for you, manage for your parents, then definitely you're going to pay them. So when I was just looking at the fees, I was like, wow, actually there are quite a lot of fees that you need to pay in order to get them to invest for you. For example, the account maintenance fee is 4%. Right, based on the account value, right, and based on your initial unique account, and then it's payable every single month, right? And second thing is, there's also investment fee being charged 1.5% per year. So if you divide by every single month, you 1.5% divide by 12. And then there's also a monthly administration fee charge. It's a fixed charge, $8 or $10, right? And on top of that, there's also additional policy maintenance fee, insurance charges, if you because it can be an insurance linked plan altogether. So there are actually quite a lot of charges. So one thing that I personally not very comfortable is, if I want to invest in something, right, and the charges is going to be actually quite a lot, okay, a number of charges, it will actually start eating up into my profits. So so that is the first question that you need to consider for yourself. Are you willing to pay so much money for people to manage for you, right? And secondly, are you able to do invest for yourself or for your parents, right? So the next one I want to share is, all this information I found it online. The second one is, they do have certain penalty if you want to encash it earlier, because when you are buying this kind of plan, they definitely want to lock you in for a certain period of years, right? So depending on how long is your duration, can be like 20 years, can be like 30 years. So the sooner you decide to terminate, the more money that they're going to charge you, right, for your early termination. So I think it's quite terrible, because you can see that, hey, number of years left, that means you buy for 30 years. If it's only left with 1 year, then of course your early encashment charge rate is lesser. But if you just bought it like maybe 2 years back and you want to terminate it, right, you can see that you are going to get back very, very little money, because they are going to charge you a lot for your early termination. So yeah, the second thing is, in my opinion, it's not something that it's very liquid. If you really want to use that cash, you cannot use it very, very readily because you cannot cash out so easily. And the second thing is, but vice versa, you can see it as a double-edged sword. One thing is you cannot cash out, but second thing is it's like forced saving. So if you are someone who lack discipline, then I think forced saving like this will help you, and at the same time, it can still help you to compound your wealth, right? So, oh, by the way, because I have never invested in this kind of plan before. So if I make any mistake, do let me know, because I am not an insurance agent. I have never bought this kind of plan before. Most of the time, I just invest for myself, for my parents as well, right? So, but of course, despite all those charges, despite all those early encashment penalty that you may face, but if you still go ahead to invest, right? Let's assume, okay, based on like $300 every single month that you invest, and for 30 years you never cash out, right? So you are very, very guai. Every single month you continue to pay, and the annual return for the funds that based on this AXA Pulsar, you can actually select your funds, all right? Or maybe you can get that insurance person to suggest you. So let's say the fund performance at the end is 12% per annum. And then you can see that after 30 years of investing, your total premium paid, it's about $108,000, all right? And eventually, because every single year your wealth is compounding at about 12%, but because there's definitely certain fees that you need to incur, right? Because you are getting people to manage your money for you. So the net return is about 10.19%. So after 30 years, can you see that your wealth is still compounding very, very quickly as compared to you putting money in the bank, right? So if you just compound 30 years and every single year your return rate is about 12% as a general policy, right? That's when your total interest earned, that means your total profit eventually will be about $600,000, which is really, really not too bad, right? Consider your ROI, it's about close to 560%. Very good. Okay, so what kind of funds that can you invest, right? Based on this AXA Pulsar, I can see that you can choose multiple funds, be it your Franklin Technology, your JPM Greater China, right? All of them will give you a different return because individual funds, they actually invest in different sector or different companies. So just for example purposes, I'm just going to look at one of the fund called Franklin Technology. All right, let's take a look at what kind of companies are these funds investing in. And I believe whether you decide to invest in funds like this or not, it's still good to look at them, because at the end of the day, even someone else are helping you to manage your wealth, it's still good to know what exactly are they investing in. Yeah, so don't follow blindly, really check what kind of companies are they investing in via the funds. All right, so you can see that this is Franklin Templeton, which you can also find all this information just by Google it, right? You can see over the past 5 years, the performance of the fund is actually pretty nice, right? And if you go down, just like scroll down below, you can see that most of the time they are investing in tech companies, right? That's why it's called Franklin Technology Fund. So what kind of companies are they investing in? You have your Amazon, your Microsoft, your Apple, your PayPal, your Baba, your Tencent, right? All these very famous companies that we all know, right? And 86% or 87% of the funds is actually in United States, while the rest of the percentage is in other parts of the world, right? So next is, hey, if you can invest in these kind of funds, actually you can even take it as a reference. For example, you know that if these funds are performing well, instead of buying the fund, you can also consider buying some of the companies that are inside the fund. Because at the end of the day, these are the companies that have been helping to drive up the performance of the fund as well. So this is another way that you can get investment ideas for yourself, for your parents as well. Next is, I think one good thing about AXA understanding from my friends who also actually he also invested in this fund as well. Back then he didn't know anything about investing, but he also know the importance of investing, and that's why he decided to buy these funds. But now he also start to learn investment by himself, and now whatever money that he has, right, he actually invests on his own. Yet he doesn't want this policy to lapse, because once he lapse, that means he's going to pay, he can't get back most of his cash. So that's why he continued to invest, because it's a sunk cost, right? So based on the screenshot that he sent me, using the allocation that he actually paid, right, the premium that he actually paid, the agent actually helped him to diversify into different funds as well, which I think is considered quite a good performance at the end of the day. Now it's about annually about 15%, okay, which is not too bad. All right, so I think if you really don't know how to invest for yourself, then consider having someone to invest for you, if the person really know what are they doing, right? And but some of you may be thinking, hey Chloe, then is it possible to actually invest in something that it's easy to manage, it's passive, but at the same time, I don't need to pay so much fees? Okay, guys, what do you think? What do you think, in your opinion, that is actually could be better than investing in this kind of pulsar funds, that at the same time you don't have to actively manage it, but still give you a very decent returns over the years? All right. In fact, I've been talking about this investment vehicle for a long time, right? So if you know, you've been following me, you know what is the instrument that I'm referring to. Let me know, what do you guys think? Okay, do you know the answer? What do you guys think? So in the meantime, just checking through some of your comments. All right. So rule number 1, JSA, never lose money, right? Rule number 2, remember rule number 1. Fantastic. Okay. So the investment vehicle that I personally love a lot, apart from, investing in professional managed funds, which is gonna be a lot expenses incurred, right? I like to invest something called ETF, right? And one of the best ETF that is like everybody also like whoever who invests, right, you will definitely know this. It's called S&P 500, right? Yeah, exactly. Calvin also said, right? ETF. And S&P 500, right? It's like it tracks the top 500 companies in the US, listed in the US. And you can see that their 3-year average return is about 13%, right? And if you base on 10 years track record, right, how much has S&P 500 grown over the years? The average return is also about 13.55%, which is actually pretty decent, right? If you look at just now, the example that I gave you based on the article, right, based on the Pulsar Fund article, is about 12%. So they also want to be managing your expectation. Don't want to give you like 20% over the kind of return. So they were trying to manage your expectation, let's say about 13%. What kind of return will you get eventually? So in this case, S&P 500 has also been getting about 13% year on year for the past 10 years, which I think it's pretty similar in terms of performance. But now, let's take a look at what kind of companies do S&P 500 track, right? So you have your top 500 companies in the US, which has your Apple, your Microsoft, your Amazon, your Facebook, Alphabet, Tesla, also inside Berkshire. So if you see that, hey, this group of companies that, hey, actually they are really the best out of the best, right, in the US, and if you invest in S&P 500, on top of these companies, you also have the rest of the companies that are very, very stable. For example, your Starbucks, your McDonald's, everything is inside. So literally, you have a very, very diversified basket, and you don't have to be tracking them manually, because once you invest in an index, basically you are like a very, very passive way of investing, but the decent return can be still very good. Now, let's take a look at what is the difference between the investment ROI. Is almost the same, right? About 13% per year. But let's take a look at what is the difference if you invest in S&P 500, which the fee that you need to pay is so little, like very, very minimal, right? On the other hand, if you like almost, let me treat it as zero, right? Almost, it's like very, very minimal, almost zero. So let's take a look at after the 30 years, right? That you compound the same way that you will compound if you were to invest in your Pulsar fund or whatsoever. Let's start with just $300 per month. Okay, everybody, I believe most people can start to afford $300 saving per month, right, to invest. So after 30 years, right, and compounded annually, let's see what will happen, okay, to your funds. Now, we are going to do this calculation together, all right? So let's go to this website. Let me just unshare this so that I can go to the website and make you guys see the difference, okay? How much does it make, you know, if you don't pay so much fees in terms of like your management fees or whatever hidden other charges that you need to pay should you decide to invest in those investment linked plans, all right? So let me share screen. Application windows, yep. Okay, so this is the calculator that I was showing you just now, right? Let me just zoom it bigger. Okay, so this is an investment calculator. You can also get it online, very simple. All you need to do is to key in how much is the initial amount. So initially you deposit $300 and then every single month, okay, you will invest another $300. So consecutively do this for 30 years. And now let's use a number that we all think that it's actually conservative, doable for S&P 500. Okay, I'm not talking about 13%. Let's take just an average, like let's say 12%. Okay, even lower than what is shown in the S&P 500 just now. So if I grow it at 12%, what will it look like for 30 years later, right? So let's calculate. All right, so you can see that initially because every single month you will contribute, right? So you can see that your wealth is definitely growing because the US economy is also growing. But at the end of the day, let's look at the results. Guys, can you see that? Your end balance is 933,279. So this is close to $1 million end balance, but okay, there is contribution from your end, right? Because every single month you are depositing $300 to buy S&P 500, all right? So your total contribution will be the same as the example I showed you just now, should you decide to invest in Pulsar fund. So that is about 108,000. So that's why we minus off your initial contribution in total, your total interest, that means it's the total money that you actually make, right? It's more than 800,000. Guys, so how much was it just now? Should you decide to invest in Pulsar fund that will charge you a lot of fees, right? How much was it? Let's do a comparison. So now remember, if you pay very little fee, very, very minimal, eventually you will get back about 800K. So initially, if you decide to invest in Pulsar fund, let me do that share screen again. 800K versus how much? Let's go back to the application windows. Oh, where's my, hold on. Let me just start the slide share again so that you can see it. Let me find this. Okay. All right. Now, let me share that screen. Where is it? Okay, basically I'm reading off from my own screen. If you were to invest based on the Pulsar fund that I just showed you, based on the example that they gave, right? Okay, your investment final profit will be about 600K, right? Oh, well, let me just share this. Hold on, because I'm using dual screen. So sometimes I cannot see the screen at the back. Okay, now I can see. Okay. Now, can you see that your total interest earned, all right, if you were to invest in Pulsar funds like this and they give you almost very similar kind of return, I'm also using 12%, all right? So your total profits eventually, it's about 600K versus just now, how much was your return if you just invest in SPY? It's about 800K. So there is a difference about $200,000, okay? What can you do with $200,000, guys? If I give you $200,000, right, what can you do with it? What can you do with it with $200,000? And that is actually a lot of money. So if you look at the funds, the management fee, every single thing, if you look at it in a very short-term horizon, it seems very peanuts, right? Like almost nothing to you. But if you compound your wealth over time, can you see that that little management fee all add up to be $200,000? Right, so you are literally contributing $200,000 of your profits to this AXA, right? That's how they make money, and that's why they continue to do what they do, because it's very good money to make, and somehow they lock you in, right? So they know for sure, give it long term, they will be able to profit tremendously from your investment, right? So save yourself. I think my advice is, if you can invest for your own, right, save yourself that $200,000, because you can literally do so many things, right? If you choose to, you can even use it to invest in properties, in like cryptocurrency. I don't know, recently like Pete, he's mentioning about how important, and it's important to diversify your assets as well. So with $200,000, you can diversify into other asset classes that compound your wealth even more. All right, are you guys surprised by the $200,000? Okay, is any age more than $60? How to put in? Okay, very good. So this Facebook user is asking me this question. Hey, if they're age, like as parents, right? If you're talking about parents, they definitely very little tendency that they're going to live like 30 years or 40 years or more. But I'm showing you this as an illustration. Okay, just as an illustration, you can see that, well, 30 years can make a lot of difference, all right? But how about, let's say, 10 years or 20 years? It will also compound. So because if you give it time, if it's a good investment, it can make you a lot of money. So it's very important that you start to compound and start helping your parents to invest. And I think ETF is a really great way to get started. So some of you are asking, so does that mean that just buy one SPY per share? I think this is a good strategy. For example, if you are investing for yourself or maybe for your parents, if you want to, and very importantly, you need to have a long-term horizon, okay? So what I showed you just now is a 30 years of investment. If you want to think about long-term, right, I think minimally you should be looking at 5 years or even more. If you can look at more than 10 years, that's even better, right? So if every single month you compound your wealth by buying, like, let's say, one share of SPY, give it time, I promise you, I really think that this is one of the best and safest investment vehicle that you can use for yourself, for your parents as well, right? Very good strategy. All right, you just buy one share per month, average and dollar cost averaging, right? So, but of course, some of you may be thinking, hey, is it possible to make more than 12% per year? And the truth is, you can, okay, if you know how to select good companies to help you to invest. So some of the companies that have been like really proven to be very good, very stable, consistent return. At the same time, their share price, right? Because their performance is so good, the share price has also been increasing over time as well. So let me show you some of the example. For example, right? I think it's important, especially for parents' age, right? They want to grow their wealth in a very stable manner. So when you are selecting some kind of companies to invest for them, let's say you want to, right? I think it's good to invest in stabilizer company, right? Companies that have proven track record. At the same time, yeah, they are able to give you consistent and predictable performance, all right? So one of them that you can consider, it's actually called, Berkshire Hathaway, right? Because this is a company that Warren Buffett is running it, right? Very solid investor. And if you give it time, actually for the past 20 years, Berkshire has appreciated, right, more than 650%. Right, way more, definitely way more than your S&P 500, because when you know how to select a good company, the growth of the company can be also definitely higher than the market performance, all right? But provided you know how to select a good counter for yourself, right? So another one that, in my opinion, is very stable, very predictable, but at the same time still can grow, okay, tremendously, is actually Google, all right, Alphabet. And if you look at the past 18 years, all right, almost another 20 years time, right, the growth rate is like your return has actually increased 36 folds, okay? Does it sound amazing? if you think that 36 times, that means you multiply your wealth by 36 times, it's amazing, right? Please type amazing, right? And I really think that even till today, Google, it can continue to grow because this is a company that we personally use every single day. It's still making a lot of money from its advertisement stream. At the same time, it has many different kind of businesses that it's running. So I think it's a giant that is still growing. So if you want something that's very predictable, stabilizing, but still have growth, I think Google is considered one of them as well. I personally also have a Google for my parents and for myself as well. All right. So of course, I don't have time to go through nitty-gritty exactly how to analyze a great company and all this, but I think it's important that you need to ask yourself this question. So if you decide to invest for your parents, right? Firstly, do you have the ability to generate more wealth compared to professional managed funds? Okay. And if you don't have the ability, right, then you can also consider another instrument called ETF, right, which have shown you that it's a very, very powerful passive way of investing, but still give you very, very high return with minimal fees. All right. So my parents are conservative. They only invest in government-backed guarantee like 4 to 5%. Rather than up and down. How to convince them to go into the stock? I think when you're talking about the government back, it can be CPF. So if they think that CPF is something that they like what you mentioned, it's guaranteed government back, right? So I think you can start to convince them by maybe parting not a lot of their wealth. Maybe just start with, let's say, 10K, 20K, and you start to invest and manage for them. With this 20K, you give it sometimes like 1 year, 2 years down the road. And when you are able to show the result that you can generate for them, then definitely they will have more confidence to park more money with you, right? So I think it always takes time for people to build up the conviction in investing. And I think it's good that you already started to invest for yourself, right? Then use your result to show that you can do it, and you can also help them to manage their wealth better. Start with a smaller portfolio, but as long as you give them a good return over time, I believe with time they will be able to manage and invest a bigger money together with you as well. So thank you so much for your question as well. So that's all I have to share today. Let me know if you have any more questions. Okay. In the meantime, I think I really hope that this sharing can actually help to encourage you to start investing, not just for yourself, but also for your parents as well. Thank you so much. Yes, start small first. Okay, Anthony, that's how your parents will have conviction. So for those who are interested in to learn more about stock investing, or maybe you are talking about options investing, right? I think it's very important to also get yourself educated, because ETF is one of the most passive way. Of course, you don't expect super hyper growth from ETF, but if you want to have a slightly faster growth, then it's important to get yourself educated as well. So for myself, I actually conduct this workshop. It's a free workshop that next Saturday, 10 a.m. to 12 p.m. I'm going to share with you my own strategies that I personally use, 4 strategies to profit from the stock market very safely. But of course, in terms of the strategy wise, I'm also going to share with you option strategies. So for those who have not learned options before and you are interested to get started to accelerate your return, I think it's important to get yourself educated. All right. So if you're interested in, you can actually go to this link, bit.ly/4strategies2021 to get registered. And then after that, I will be able to send you an email with the information. Okay, let me see. Let me just open up this banner. All right, so I seldom do it. So if you're interested in, just register. I will be able to send you the Zoom link. It will be conducted via Zoom. If you have any questions, you can also ask me during that time as well. All right, in the meantime, let me see any more question. So USD, okay, this is the first question. SGD deposit, okay, let me see. SGD deposit into USTDIB will be less than what? Wait, will be less than 300 in the end. Okay. Very good question. So for example, if you know that SGD $300 will be less than one SPY share, right? What you can do is you can, let's say, save $200, right? I mean 2 months, right? Save 2 months and then you invest, right? That's how within 2 months, definitely you will be able to buy one SPY share. All right, so you just continue to do it. That means you do, you kind of force yourself to do forced saving. Every single month you save 300 SGD, all right? And then 2 months later, you will definitely be able to invest 1 or maybe sometimes 2, depending on the market condition, right? That's how over the year you will be able to collect more and more shares and yeah, compound your return, right? So second thing is, which broker shall we use by using USA ETF? So I personally use TD Ameritrade. So I know that TD, in my opinion, is one of the best platform out there, but it takes a lot of time to open an account right now, okay? So I would suggest if you don't want to wait for a few months to open your account, you can consider other brokerage platforms such as IB, Interactive Broker, Saxo also can, or Tiger Broker. Recently, this Tiger Broker has been quite popular. A lot of youngsters also start using it. You can consider that as well. So yeah, there are definitely more than one that you can choose from. All right, so okay, that's all I have to share. And before that, okay, before I end, for those who have not joined my Telegram, you can also consider to join my Telegram, because this is where I'm also going to share with you more of my own investment insights. Okay, on top of that, actually, I will also start posting some how should I say, ask your question kind of post, right? So that if you have any questions, I will actually compile and see which is the best question, or which are the few best questions that I can answer during live session like this. I will actually go and do up a Google form, and you can actually submit your questions inside, so that I can also help to address it all together and everybody get to learn, right? So do join this t.me/biz and invest Chloe if you want to follow my Telegram for more insights and ask me questions, which I will be posting the link inside my Telegram channel as well. So that's all I have to share. Hope you guys find this session useful. And yeah, with that, I hope to see you in my Telegram channel and inside my workshop as well, which we will be conducting next Saturday. That's all I have to share. And I hope you guys have a great day ahead, a great evening, and a great week ahead as well. So I will see you during next time. Thank you. Bye-bye.